Singapore has issued 4 digital bank licenses. They've gone to a consortium comprising ride-hailing firm Grab and telco Singtel, as well as consumer internet firm Sea. They will service both consumers and businesses. Chinese entities, a fintech firm Ant, and a consortium led by the investment arm of real estate giant Greenland Group have snagged also digital banking licenses to serve corporates and SMEs. The 4 digital banks are expected to operate from early 2022. And for more, we're joined by Brendan Tenuto. Brendan, why were these entities awarded the licenses?
Yep, thanks, Liz. Now, these digital banks, these applicants, were assessed based on things like the business model that they were proposing, as well as how they actually plan to use innovation and technology to serve different and various segments of customers. Now, among other things are also how they could contribute to Singapore's financial centre, as well as their growth projections, and also whether they can be a prudent and sustainable business in the long run after all. And when you look at these players that have been selected and awarded the licenses, MAS has said that the criteria for them is stronger compared to the others, even though the quality of all the applicants they received were high. And it makes sense because if you look at the players that have been awarded licenses, let's say, ride-hailing firm Grab, as well as local telco Singtel. Now, these 2 companies have huge customer bases, sizable proportions of customers that they are serving in Singapore. And it's really just the nature of their business model because it's such a consumer-facing business. And you see, these are the kind of assessment criteria that MAS was looking at when they awarded these banking licenses. Now, MAS also did take into account the impact of the COVID-19 pandemic and what it had on the applicants in terms of things like sources of funding as well as business plans. And now the reason why this was the case was because the applications for the digital banking licenses were received before and submitted before the pandemic kicked in. So it made sense for them to relook and review what impact the pandemic had on these applicants. So just to recap, all in 21 digital banking applications were submitted, but by June this year, it whittled down to about 14, and these were 5 digital full banks and 9 digital wholesale banks.
Brendan, I think one of the most important questions also is what are digital banks and how will customers benefit?
Great question, Liz. Now, digital full banks, these are banks that are allowed to take deposits from customers like you and I. So to give an example, it's very similar, it's very familiar to customers or people that have savings account with the incumbents, DBS, UOB, OCBC. Same business functions, except that it's entirely online. But it's entirely online and fully digitalized. But these banks will start at a restricted stage. So what does it mean by that? For example, there's a cap of how much deposits they can take in total, as well as from an individual. And MAS holds the final say as to when these restrictions will be lifted. And this will be if MAS, let's say, for example, decides that the bank can demonstrate its ability to manage its operations and risks in an adequate manner. And the other one, digital wholesale banks. Now, this one is different from the digital full banks because, as you mentioned earlier, the digital full banks, they serve corporates and retail customers like you and I. But the digital wholesale banks, they only serve corporates and SMEs, small and medium enterprises. And these are the customer segment. This is the customer segment which usually struggles to find funding sources. But then the more important question is, what does it actually mean for customers like you and I, right? So apart from more choices to choose from, obviously, digibanks can also afford to offer better and more attractive interest rates. And this is why, because digital banks, they operate completely online, and because of that, they don't have to fork out costs to manage bank branches and ATMs like how the traditional banks and incumbents do it. So because of that, experts are saying that, they can afford to offer better interest rates to customers. And it's also, think of it as a tactical promotion for them to attract as many customers as they can to start building up their customer base from the get-go. And also, the other benefit that customers might be interested in is also the fact that digibanks can open deposit accounts without imposing a minimum amount or adopt a different credit risk assessment approach. And this is good news for small and micro enterprises or startups that are seeking financing because, for instance, traditional banks sometimes, for example, they're not willing to take the risk to lend to such small firms and such small enterprises because these mom and pop shops, for example, have little banking records and assets to pledge as collateral. And as a result, most banks usually require collateral to give out a loan which acts as a guarantee in a case where, let's say, these micro SMEs or startups are not able to repay the loan, they'll just take the assets in exchange.